Today, we have a terrific webinar, Taking Cyber Risk Management to the Next Level. This webinar is focused on banking and financial services, cybersecurity, and risk management. And without further delay, I'd like to introduce our speakers today. We have Steve Racing, CEO, President of ASMGI, and Frank Yako, CIO and Director of Strategic Initiatives for ASMGI. So let's take it away, Steve.
Great, thank you, Paul. Thanks to all the attendees for sharing your time with us today. Great topic today. So we're going to talk specifically about cyber risk and how to elevate your program for evaluating cyber risk and those kind of things. So it's a great and very relevant topic. I'm Steve Racing, President and CEO of ASMGI, and joining me today is Frank Yako, our CIO and Director of Strategic Initiatives. Thanks, Frank, for being here today.
Thanks for having me, Steve. Looking forward to the conversation.
Great. Well, we'll jump in. So what we're going to talk about is some introductions, which we've already done, a little bit about organizational risk and cyber insurance, and then we'll address some current cyber risks in banking and finance, and what ASMGI proposes as a viable risk management model to address those, and then wrap it up with some closing remarks and a summary. So without further ado, I'll get started. But before we do that, I encourage the audience to really think about, what brought you here today, right? So is it cyber insurance? Are you trying to address that? Do you have a policy and those kind of things? Is it third-party risk? Are you trying to address those programs? But again, third-party risk, we send a lot of questionnaires out as third-party risk. We get a lot of questionnaires back as third-party risk. So we all, as organizations, have third parties, but we generally can get it evaluated as well. So are you just trying to understand your organization's risk profile and leverage a model to establish that and those kind of things? But I think it's worth just thinking about those questions as we proceed. So some objectives and key takeaways that hopefully we'll address in this webinar. Can you assess and manage organizational risk? What about cyber insurance and those kind of things? What are the current risks that are most pervasive in the banking industry and the finance industry and such? And then provide an overview of this risk management model. So I'll dive in and start with organizational risk. So we'll start with a question. Can you assess and manage your organizational risk? What do you think, Frank?
That's a loaded question, literally, not just because the dice are on the screen there, but it's actually is possible. And I know that's part of the reason for having this conversation today, but the answer is yes, but it can be a pretty daunting task if you don't have a methodology to go about it.
Yeah, well said. And I would add that there may be a lot of steps involved, but we'll try to take the complexity out of that and help understand it. But it would really help to establish, I think, across the board, a risk-based model, right? A risk-based thinking. And if you think of everything that way, then everything starts to fall in place and take shape. And I think that's a critical component of the program that we're going to talk about. So some areas of risk that are organizational risk really applies to. Organizational risk is really any risk that an organization will face, right? So it can take a lot of different shapes and sizes. We're going to focus on the cyber aspect of it, but any thoughts on that, Frank?
Yeah, and to your point, as far as organizations taking that risk-based mindset, it does include having that holistic view of the world that an entity or client or organization lives in. That's really the kind of the point of this slide, is just to highlight all the different areas that need to be addressed, and part of that overall assessment to make sure that there's no stone unturned in that process and looking at it.
Yep. And it's worth noting, and maybe the audience are risk professionals and really understand this anyway, but you can't be in business if you're not willing to take a risk, right? So you can't just like avoid all of the risks. And we'll talk about treatment of risk a little bit, but there is going to be risk. And I think the process that we're trying to unfold and really gain some clarity around is like how to measure it and how to manage it, right? So I think that's the key. So there are external forces that act on organizational risk, and there are internal forces that act on operational or organizational risk. So some of the external factors, regulations and compliance, huge in the banking and the finance industry, as we know. Business commitments, contractual commitments. You have contracts with your clients, you have contacts with your vendors, you have contracts all over the place, and they have commitments in them, right? So cyber insurance may actually be one of those. But then there are also internal requirements or things that influence what your organizational risk might look like. Business viability and growth plans and these kind of things. Like what's the market doing? Where do you go? Global warming. This is huge for the banking industry, right? So there are executive orders that really have to do with that. And you would think, well, these are things that we don't have any control of, but you do have control over how it impacts your business and those kind of things. And I think that's really the root of the model. So who owns organizational risk? What do you think, Frank?
Well, I know, some of our conversations related to cybersecurity today, but really when we talk about risk on the last couple of slides, it truly is a business issue. That's the part that, I think, we really want to emphasize is that it's not just something that stops at risk or the risk department or security, that it really has to be owned by the business and in turn, even all the different potential areas of risk into business decisions, because as you mentioned, there's risk in everything an organization or business does. It's just a matter of really assessing, what the potential impact is to the organization and how you want to deal with that.
Yeah, well said. Well said. So here's an equation that we're all familiar with. Maybe just explain it a little bit, Frank.
Sure. So as we again look at all the different things that could impact an organization, it really comes down to what the potential likelihood is that type of item or risk can impact your business, and then in turn, what the impact is. And so by having that broad view and perspective, it allows you to take and ultimately decide whether you want to what the frequency or the likelihood is and what the impact is and how you can affect either one of those items so that in the end you can reduce the risk for that particular threat to the organization. And that really, to the points that are made underneath that, it sounds simple, but that really, unless you really have that holistic view of your own environment and the industry that you actually function in, you don't have the ability to truly assess what the risk is to your organization and then make some type of impact on that.
Right. It can be a hard exercise, but it shouldn't be a complex exercise. It's pretty simple math if you think about it, right? So if you want to lower your risk, you got to lower the likelihood or lower the impact. And it's been said that likelihood is tough to understand and really predict. But so is impact, right? So monetizing cyber risk can be a daunting task, and there are various different methodologies to do that. But I think if you go through the primary risk or the critical risk to your business, especially from a cyber standpoint, then this equation it starts to make a lot of sense, right? It's pretty simple and straightforward, and it's just math, right? At the end of the day. So that's what I like to say, but it is a complex topic. There's no question. From a mitigation standpoint, really, there are only 4 ways that you can address or treat a risk, right? So the treatment of risk is either you accept it, avoid it, or transfer or reduce it. Accepting it means that, the cost to mitigate it, if the cost to mitigate a risk is higher than the cost of your business, of the risk itself, don't mitigate it, right? That's just accept it. And what the point that I like to make about accepting a risk, if you do accept a risk, then you are the one that's responsible for the financial liability. And that's it's important that people understand that. But I think that's a viable treatment of risk. Avoiding a risk, the metaphor we use for that all the time, if the risk is falling off a cliff, don't go near the cliff, right? So you basically avoid a risk by not taking the chance, right? So if there's an area of your business that has a lot of risk and you choose not to go that route, then you don't have that risk, right? So it's pretty straightforward from that perspective. Transferring risk is generally, putting it on an insurance policy, or carrying it on your balance sheet. But what it basically means is that you transfer that risk to somebody else, and they're responsible for assuming the risk or the financial liability that comes along with it. Reducing the risk is basically mitigating it, and that requires investment. There's no question. But if you put your dollars into mitigating a risk, that means that you lower the likelihood, or you lower the impact to your business by virtue of you spend money to mitigate the risk, and therefore the likelihood or impact is reduced, and so is the risk to an acceptable level to your business. Do you any thoughts to add to that, Frank?
Yeah, I know we'll get into sort of the details behind this as we go forward. So I think it's important that everyone understands this model, and then how to, based on all the risks that are identified, how to apply that to that assessment process.
Yep. Well said. So just some things to think about for the audience, right? Food for thought. Do you know the cyber risk profile of your organization? Do you know the cyber risk profile of a critical third party? Like if you put your data in somebody else's hands, do you know if, what their security posture is, or if there are risks, or if they encrypt the data or not, or if they patch, or if they fix vulnerabilities? Do you know these things? Do you have a plan to manage through organizational risk? I mean, it's critical that an organization has that. What about compliance and regulatory requirements? So in banking and finance, there are a lot of compliance requirements, right? So how are you going to address those, and are you addressing those? If you're a bank in the US, you get audited. There's no question. So that's probably how you're going to address them. You need to make sure, but auditors often have findings, right, in these audits and various different things. Do you know that the assets that you have, both the digital assets and the physical assets, do you know what they are? It's hard to protect it if you don't even know you have it. So I think that's important. I want to spend a little bit of time talking about cyber insurance. Not a lot of bit of time, because it's not really the content, and we've done actually webinars specific to the cyber insurance topic. But the thing to understand about cyber insurance is it's an evolving thing, right? So it's changing all the time, and what's covered today may not be covered tomorrow. But insurance companies, here's the way I look at it is, look, if you're an insurance company, you don't want to pay a claim, right? You may say you want to pay a claim, or you're quick to pay a claim, or those kind of things. But the reality is, if you charge for the premium, that's revenue, that's money coming in, that's income. And if you pay a claim, that's an expense. And so you look for a way not to do it. And I think what I put in here is one of the things that we talked about not being covered is costs or losses involving an agent of a foreign entity. There are examples of cyber insurance companies saying, well, I'm not going to pay that claim because it's an act of war, right? And this happens a lot more often than people probably would like to admit. The insurance companies are trying to not pay the claim. And so active war from a cyber standpoint, it's not a stretch, right? It's not a stretch if it's a nation state that it commits the crime and those kind of things. So in any event, it's a give and take. It clearly is. And I think the message, the lesson in all of this is really understand what's covered in your insurance policy, because insurance providers are going to do exclusions and inclusions and mess with the premiums. And I think one of the lessons in all this is, like, just because you've had cybersecurity insurance in the past, it's a very, very changing area of business. You might not get a renewal. And if you're trying to get a new policy, you might not get a policy if you don't do certain things, or if you've had a data breach in the past. This is like speeding tickets, right? You have points on your driver's license. If you get too many, points against you, it's going to be harder and harder and harder to get insurance, and the cost is going to go up and up and up because you're a higher risk, right? You're deemed a higher risk. So any thoughts on that?
Yeah, I mean, really ties back to the understanding what the risks are to the organization, and then be able to understand based on what those are, whether your policy is appropriate for your risk profile.
Yeah.
And then as part of that as well, back to the transfer, scenario or option, if certain things aren't covered, then you're not able to transfer that risk to your insurance provider. So that's another piece of just really understanding, how those pieces fit together and whether you're even covered for the things that are potential risks to your organization.
Yep. Yep. One of the things that we did was poll a group of people and just find out. The first question we asked was, hey, have you ever been asked by your site or, made it a vulnerability assessment, as part of your obtaining or renewing a cyber insurance policy, right? Have you ever, been handed a report from your cyber insurance? And the results are shown here. And the second question we asked was, well, how about your customers, right? So have any of your customers ever said, hey, here's a report based on your security posture and those kind of things. But what do you think about these results, Frank? Do they say anything to you?
Yeah, I mean, a couple of things. One is it really, is a symptom of part of the problem out there that one, if you aren't monitoring your risk profile and that becomes a condition of having a policy, you have to be aware that exists. So that really kind of talks to the first question. The second is as far as the ratings and whether you've had that as part of a third-party risk management program. That all goes back to really understanding how you're perceived out there from a risk profile perspective. And again, we'll talk a little bit more detail about some of the details around that. But ultimately, there's a lot of information out there in the world, and it may impact your ability to either get an insurance policy or even to do business, with some type of entity that you're trying to pursue, as a business relationship.
Yep. Yep. This this slide, there's a lot of data on here, but I think the things that I would highlight the most from this slide are, and insurance companies today, they are checking external factors on everyone before they do a renewal or issue a policy. And there are a lot of people that are not able to obtain a policy or gain a renewal. If you're an A or B, so full disclosure, we're a security scorecard partner. So we're pretty familiar with these reports and what the components are. There are 10 categories that they evaluate and score and give a letter grade for, and those kind of things. If you're an A, B, or C, you'll get an insurance policy. If you're a D or an F, you won't get an insurance policy. And that's, if you think about it that way, like, wouldn't it be good to know these things? And what do all these numbers mean, Frank? I mean, can you tell us a little bit about this?
Yeah, this is, again, it can be used by insurance, providers to assess right out of the initial process of determining what the appropriate policy is for you, what type of policy they're willing to make available to you. So this is information that they leverage as part of that process, and that then could directly impact the type of services that are coverage that you're provided based on how you score with each of these categories, as well as the cost of that policy. And then the second column regarding the followers is just the fact that there's a lot of entities out there today that aren't taking just the assessment questionnaire as the gospel for how what you are or not doing as an entity for your security program, and they basically use this type of external information to determine whether you're maintaining the levels of security that you've indicated in an assessment, or whether any changing factors impact the potential risks to that organization to even do business with you. So this, without getting into all the details of all the categories, this ultimately translates into the score and your grade, and has a huge impact on all the things that you do as an organization or business.
Yeah. Yeah. I wanted to show some actual like summary from the financial services industry, some summary reports, right? That you can have a good security posture or bad security posture. But the point that I like to make about these reports is that everybody's using them. So wouldn't it be nice to know this information, right? So and it's not just the insurance company and it's not just your customers, right? But they are using them. Insurance companies are using them in all, like every single time, right? So they're going to evaluate your risk. And if you have a low risk or a high risk, a low score, they won't give you a policy. That's plain and simple. So wouldn't it be good to know those things and not wait for your insurance provider to show you that? Wouldn't it be nice to know that there are companies that are probably evaluating your risk profile from the outside in, right? And they use these scores for that. But the point I like to make is so do the bad guys, right? So if a vulnerability shows up on your report, they're going to exploit it. They absolutely are going to exploit it. And the reason is, like bad guys, they want to do things that they know how to do, right? So they're going to look for a standard set of vulnerabilities, and if one shows up, then they'll exploit it. They've already bought an exploit kit for $100 or $200 or whatever, right? So it's this. I always go back to the same question: like, wouldn't it be nice to know these things, right? And if you plug these holes, I get you can't do everything, but if you plug these holes, the bad guys are going to move right past you and they're going to go to the next guy, somebody who isn't making that investment in security. But if you look at these reports, like this D report, this 62 risk score, they're not going to get an insurance policy. They have 3 Fs. They're failing, network security and DNS health and patching cadence. They're not going to get an insurance policy. Period. Right. So they offset it with some A's, which is fantastic. I love that. But fix these vulnerabilities, but you can't fix them if you don't even know they exist. Right. So the other thing I want to point out about this, and I know it's a bit of an eye chart and probably can't be seen, but part of what we look at is open ports. If like RDP was the #1 exploited vulnerability. And it's simple to fix, close the port, right? But from a configuration standpoint, a lot of companies left the RDP port open. So I'm 100% sure in the banking finance industry, the auditors are looking for these things, right? They're likely running a scan or they're reviewing evidence that you've run a scan, but they're looking for open RDP ports. And you better have a good reason if that port is open, right? There has to be a valid business reason. The 84, the B, they'll get cyber insurance for sure. The D that's a 65, they're not going to get cyber insurance. And how many followers do they have? Like, I don't know off the top of my head, but there are other people that are seeing that you have a poor security risk. So how many times, are you being evaluated for services or products or your products or services and being overlooked because you have a low security posture? It's happening today, and I think it's worth noting that as well. So here's what I want to do, and I want to just mention this for the attendees that are on the webinar. We'll provide that report. If you want to have a look and see what other people are already seeing about you as an organization, how you look to other people, we'll provide the report. We'll also provide a consultation, like a phone call, to go through it and just really understand what's on it. But I just wanted to mention that if you're interested in that, send Frank an email or put a note in the chat box or those kind of things, or in the Q&A box, and we'll make sure that gets addressed. So what are some current cyber risks in banking and finance? The top 5, these are the top 5 that from a cyber risk standpoint. Ransomware is bad, and banks are a target. There's no question. And it's going to continue to be bad for a while, and until we figure out how to stop it, right? But ransomware is the #1 cyber risk for banking and finance. Attack surface reduction. This pretty much shows up for all industries. In banking and finance, it's no question, but attack surface reduction is just about, if you reduce the amount of surface area that the attackers or the bad guys can go after, then they have less of a likelihood of being successful at doing that. Cloud-based attacks is moving up the value chain because people are moving more to the cloud, it just makes sense. And so the risks of moving to the cloud are high. And part of the reason is like the public clouds are changing so fast, it's very difficult to keep up with it. And a lot of people move their existing workloads and various different things. They don't, pay close attention to configuration errors. We all know that S3 buckets, I think I deemed 2017 the year of the S3 bucket, but it's still happening today, right? S3 buckets can be left exposed and with public access to the internet. People are putting confidential information in there. So lots of things. Social engineering, we'll probably see this always on the list, but social engineering means being tricked into doing something bad. And there are all kinds of business email compromise and phishing emails. And, people recently have been sending like thumb drives or zip drives, mailing them to people or dumping them in the parking lot and doing kind of things like that. And, that's malware. If you plug it into your desktop or laptop, you're getting malware. And so those kind of things all fall under that social engineering category. And for banking and finance, compliance, it's a huge issue. So if somebody changes a compliance requirement, you may have to change your controls. You may have to do additional work. You may have to do additional things to meet that compliance requirement. So it's a critical. The other things on my list, third-party risk. This is a requirement in banking and finance. We know that nth party risk is a requirement, but you don't have control over nth parties, right? Fourth party. So all you can do is evaluate the third party risk program of your third parties. But in any event, third parties are clearly an area of concern. ATMs and ITMs, this is a very popular model for banking and finance today. And I think COVID really exacerbated this and probably sped to it. But a lot of bank branches closed, right? Shut down as a result of COVID. People were not traveling or leaving their homes. And so, having an interactive teller session, and so those ITMs, it's a good replacement for that. And certainly during COVID, but I think the new norm is it's going to stick, and a lot of banks are recognizing an operational cost savings as a result of shutting branches down. So ATM and ITM security relate to OT and IoT security in banking and finance, and we know that from an attack surface standpoint, OT and IoT devices are pervasive, right? They're popping up all over the place. So incident response is a huge area of concern as well. So attack surface reduction, I wanted to talk about a little bit, Frank, because that it's a newer topic and a newer concept. It's a category at Gartner and those kind of things, but a lot of people are focused on reducing their attack surface. And I think this is critical for people to understand, like, what is an attack surface even, and how do you reduce it, right? So it's if you think about it and you use risk-based thinking, your attack surface is every place. It's the surface area, right? It's of the attack. So you've heard the term attack vector and attack surface. Attack surface is the surface area of where you can be attacked, right? And those kind of things. So how do you reduce that? You eliminate areas that people can attack. So you do that by network segmentation. You do it by all kinds of things, making sure your code is secure and those kind of things. There are various different ways to strengthen that. But one of the key elements, I think, Frank, is discovery, right? Identifying where those attack surfaces are. They're internal, they're external, there are items, there are assets that you have that have external access. There are assets that you have that are internal only. There are IoT devices popping up all over the place, right? So they add to your attack surface. ITM, ATM adds to your attack surface. Digital anything adds to your attack surface. So how are you going to address those risks and those kind of things? Any comments on that?
Yeah, I think not one, but just one of the other examples that also impact financial services organizations is you don't only have to deal with your internal users within your organization, but you also have, say, in the case of like mobile banking or all policy or account holders that access the services that you provide. Those are a huge, attack surface because just of pure volume, and then the whole potential of social engineering, account takeover, phishing, I mean, extends that the tax service significantly or
Yeah.
exponentially.
So I'm going to just impart a little interpretation here to what you just said. But if I'm a consumer of a bank and I use my phone, if I have poor digital hygiene on my phone, then, and I log into the mobile app of my bank, then that poor hygiene can be inflicted upon the bank, right? Other customers or whatever the case may be. Well, that's a good point. It's well said.
I'll be right back.
I wanted to talk a little bit about the challenge of doing asset inventory as it relates to these things. And so BugCrowd recently analyzed a bunch of firms, but they analyzed the internet accessible, so the externally facing internet accessible assets of several organizations in the financial services industry. And they did that for the purpose of helping the financial services industry better understand their risk, right? What they found was that it's rapidly expanding, right? To the point that in total, there are over 6,000, I don't know how many companies they evaluated, but over 6,000 expired TLS certificates. This is a huge, it creates, I can see the bad guys just salivating over this, right? It creates a huge attack surface because the bad guys are like, hey, there's an expired TLS certificate or whatever the case may be. But this is a very, very big concern because the bad guys, they know how to exploit that. It's been exploited in the wild. So again, I talk about the risk-based thinking that's used. TLS, being able to exploit a TLS vulnerability from a risk-based thinking manner, the bad guys already know how to do that. Right. So don't have it, take care of that. But it's difficult to do asset inventory and understand those places that you have. The other part that I wanted to call out on this is that it's a stark reality. I'll just read from this paragraph. It's a stark reality where internet accessible asset inventories can reach 5, 6, or even 7-figure totals. Think about that for a second. That's mind-boggling. Even a 5-figure total. That's 10, 20, 30,000. I just, it's staggering. 7-figure, 6-figure, or 7-figure. It's mind-boggling, right? 100,000, that's a 6-figure number. 1 million, that's a 7-figure number. It's staggering when you think about it that way, right? So it's very difficult to really understand how many digital assets you have, how many things are exposed to the outside world, how many externally facing applications do you even have in your organization? I think that really puts it in perspective that a lot of companies don't really understand what they even have. And so I think doing that discovery piece is so critical. And there are a lot of passive, active, or passive scanners today that'll help you identify and inventory what you have for assets, right? So the exercise of reducing attack surface or doing vulnerability remediation, even on however many assets you have in your organization, it can be daunting, but you have to start, and you have to start somewhere. And I think gaining an inventory is a good place to start. So I wanted to talk about this executive order, not because I want to go on a tangent and go through the executive order, but I just want to mention that in the financial service center, there are a lot of executive orders actually that apply to financial services, but EO 14028, this is an executive order that it came out in May of 2021. We've done several sessions specifically on this executive order. It's really targeted towards people who do business with the government, but what the government is saying is basically this: we need to do a better job of protecting our critical infrastructure. Banking and finance is part of our critical infrastructure. So it has been identified that if the banking and finance world crashes, that it would have a critical impact on our nation. And so from a cybersecurity standpoint, it's critical infrastructure for sure. Absolutely. Does it apply? If a bank does business with the government, it definitely applies, right? But The key point I like to make about this executive order, and again, there are a lot of executive orders that apply to banking and finance, even one on global warming, which we're not going to talk about today, but there are a lot of executive orders that came out in the past 1 or 2 years that really apply to banking and finance. But this particular one definitely does. And it calls out a couple things that I think are really important to understand. Software supply chain. So the concept of an SBOM or a software bill of materials really is a pervasive part of this executive order, this specific executive order. And I think what it means is if you have an application, make sure you document what components it has. We've found examples of applications that have like 1,500 components. And I always use a calendar picker as an example, right? If nobody's going to build a calendar picker from scratch, right? Don't recreate the wheel. They're just going to go probably download a free version, which is open source, and it's going to have a library, and they're going to be components. And there has to be a way to identify those and the vulnerabilities that are associated with that. And that's what this executive order addresses. It also talks about, OT devices, and it talks a lot about zero trust and those kind of things. But I think it's important to understand that the regulatory and compliance requirement in banking and finance is very, very high. And not only do you have to meet the requirements of the OCC and the FFIEC if you're a bank, but you also have to meet these executive orders as they become more pervasive and apply to you. And I think, a lot of push down is going to happen on these executive orders, right? So people are going to establish best practices as a result. NIST is already adopting a lot of the principles and practices of these executive orders into frameworks and security policy and those kind of things. And, we all know that a lot of companies are adopting NIST as a framework. So there are probably other things that are going to be addressed. Compliance is more challenging than ever. And the point I always like to make, Frank, is that compliance is never going to be less stringent, right? The world we live in is different than it was yesterday, and tomorrow it's going to be different than it is today. And nobody's ever going to be a ruler of the world and say, do away with all these compliance requirements, because the nature of the world is to try to protect the consumer and those kind of things. So all these privacy laws that we see popping up all over the place and all these compliance requirements, they have that intention, it's a great intention, and I think it's pure. But we have to do a better job of cybersecurity protection and those kind of things. But I just wanted to go through some of the compliance requirements. AML, we know in banking finance, it's huge, and AML stands for anti-money laundering, governance and core risk management, consumers and consumer protection, capital and liquidity, data infrastructure, cyber and operational resiliency. So, the auditors and the banking industry and the government officials are saying, hey, you have to be, pay more attention to cyber and be more cyber resilient and those kind of things. So I want to go through these risks real quick, and I want to get to the last segment of our talk. But third-party risk management is a huge component, and the banking finance industry, places a requirement on that. And so it's important. The auditors are going to ask you, if you're in the audience, your auditors are going to ask you, are you evaluating or doing due diligence on your vendors? Are you putting critical data in a vendor that you haven't evaluated? So we have a very mature third-party risk program at ASMGI, and we can help. But I like the platform that we have chosen to use called Engage, and there's an open platform. So what I always say is that we'll probably receive a third-party questionnaire from anybody that we're trying to do business with. But we also have third parties that we use, right? So we have to assess them and issue a questionnaire and those kind of things. This platform onboards vendors, and you can put all your information in the platform and answer the questionnaire. And theoretically, right, you don't have to do it again. So if somebody chooses to use their own custom questionnaire, that's fine. But I think this is an area we're looking at automating most of the practice areas, and there are organizations that have thousands of vendors, and they have to evaluate them. That's quite honestly. So any thoughts on this, Frank, or anything to add?
I think the main point is the breadth of the types of risks that, this just kind of reemphasizes the points that we made earlier, is that, this is a pretty significant list, and it does take time and effort to go through and make sure that you're accounting for all those different risks. But there are options for helping to facilitate that and reduce that burden. Obviously you still have to understand what vendors you do or third parties you do business with. But then once you have that defined, then you can set up the mechanisms using something like this to help truly affect that change or have that awareness.
Yeah. And I think that's why we started talking about organizational risk, because you have to evaluate across all of the spectrum, right? And I think business resiliency is where you can be most impacted. So if a vendor can be responsible for you operating or not operating, then you have to do a deeper dive on the due diligence perspective and really understand what's going to happen and how, how they can impact your business, the likelihood of them impacting your business, and the impact of them impacting your business.
And interesting enough, in that model, one of the components is the cyber security risk, and that does incorporate information like security scorecard into that model as well. And it is real time. So that's the other point, that the point in time assessment model is just not practical in the world that we live in today.
Yep. And that's a very good point that you make, Frank. And this applies really to all industries, but certainly to financial services. That I think that, from a compliance and regulatory standpoint and audit standpoint, people are saying, a point in time assessment is not going to cut it anymore. And if you think about vulnerability management that way, right, you can evaluate all the vulnerabilities today. Tomorrow, there are new vulnerabilities. There's no question. So you have a point in time, a snapshot of your security posture today. Tomorrow, it's different. And so that's why I think prioritization and that risk-based thinking becomes so important, because as it relates to vulnerability management, when a new vulnerability shows up, you have to reprioritize everything that's currently on the stack, which you're probably leveraging resources to do. I want to spend a little bit of time talking about a model for risk management, and the equation that we leverage, that we like to leverage, is that in order to do risk management, first you have to do an assessment and really understand what those risks are. And you also have to put an incident response program in place. So anything to add to that, Frank?
No, I know we'll get into more detail on that, but you really have to, just having the assessment doesn't help you. Same conversation, unless you have some type of program for how to deal with potentially the inevitable of those risks impacting your organization. So that's where the combination of those two are extremely critical.
Cool. The other thing I like to point out is that there are 4 treatments of risk, and they all have to be evaluated when you're evaluating risk, right? It could fall into any of these buckets, but for the purpose of this exercise, let's take accepting the risk off the table. Let's take avoiding the risk off the table. Let's take transferring the risk off the table. Let's talk about how do you reduce your risk, right? So how do you mitigate these risks? So we're taking all the other things off the table. When I look at the risk assessment, there are a lot of different components that can go into a risk assessment, right? So we look at risk assessments as being gap-based, right? You have to pick what you want your future state to look like. It could be compliant with certain things, right? Government bodies, FFIEC or OCC regulations and those kind of things. Or it could be compliant with ISO 27001 or NIST or 853 or whatever the case may be, or the cybersecurity framework. You pick what you want your future state to be, so that we have something to assess against. And your current state is whatever it is, but everything between your current state and your future state is a gap. And so the other thing that we do is prioritize initiatives and build a roadmap for accomplishing or getting to the future state. Is that a pretty good representation of what a risk assessment is?
Yeah, I totally agree. That's really where, applying that consistent model really helps to get your arms around that.
Yep. So I want to go through basically, how you accomplish this, right? So how do you look at all of these attack vectors? So I think it's worth noting that an attack surface is what the bad guys are going to attack. An attack vector is how they're going to attack it, right? So their TTPs or tactics, techniques, and processes are part of, or procedures are part of the attack vector. But how do we analyze attack vectors and make sure that we have the right controls in place?
So going back to the, understanding the risk profile and all those different potential risks to the organization, then you can start to go through and apply a process like this of really dissecting all of those and taking them through, really the assessment of what that potential impact is to the business, and start to, even validate that, which is highlighted in that fourth box on the top row of validating that against the organization and working with the organization to get feedback, going back to the point that this is a business problem. So, it has to involve the cross-functional, involvement of everyone within an organization to really validate any findings that might have existed. And then ultimately, once you have that sort of stack ranking of those risks, understand, potential impact and likelihood, then making sure that, you go through the process of determining how you want to respond or deal with that type of incident. And then, ultimately to actually go and assemble that cross-functional team to exercise, a response to those types of incidents, so that in the event something does happen, you're prepared to deal with it. Unless you do that homework and that upfront planning and exercise those skills, you won't be prepared to deal with potentially the inevitable incident that might occur.
Yep. Yeah, I think that's fantastic, and it's so important. We say practice all the time at ASMGI. It's so important to practice incident response and via tabletop exercises, right? And I think the point that you're making in this model is practice it for every attack vector that's identified. So I wanted to go through this a little bit from a summary standpoint. We have a list of activities and, a list of areas that maybe they apply to and those kind of things. Can you reflect a little bit on this table and, what this all means?
The goal of this is to really, at least at a high level, put into each of those different columns on the third party through end users, sort of how you could categorize the potential risks that impact your organization. And then what we really recommend is going through the activities that are in the left column and think about those consistently, so that you're always going and understanding, from an inventory perspective, what the inventory is across all those columns on the right. Then applying that risk profile assessment to that, so that you're analyzing, what your current risk profile is, where you have potentially significant risks, and then that helps you to prioritize how you potentially remediate those. But then ultimately getting into that, the monitoring step across all those different areas is, not just doing this, like we said, on a point in time basis, but some method for monitoring whether, there's changes that might be occurring to your environment across all those different categories. And then, again, doing that consistently against all those, not just any one of them, but you have to do the breadth of those. And then, the vulnerability management and remediation, again, really, even though we're talking about a pretty large spectrum of items, that really is the same type of thing. Once you understand what your risk profile is, how to prioritize those, managing the process of remediating those, and then continuing to do that on an ongoing basis through the monitoring. So as changes occur, either things that you can control or might be outside of your control, even with third parties, or even things like open source software, just as examples, you have visibility into that, and then you determine what the impact is, and then go through the remediation process.
Yeah. And I just want to emphasize how important, having that risk-based thinking is to really accomplishing the prioritization task, and how critical the prioritization task is. So again, if we use vulnerability management for an example, I like to use Log4j as a good example. So there are programs that we put in place that vulnerability management is a part of the program. So we evaluate a company at a point in time. We take a snapshot, like right now. If they're going to be onboarded, we run vulnerability scans and we identify where they're at from a security posture standpoint and what vulnerabilities are present. And then we build what we call a get well plan for that, right? And so that's based on a point in time look at what vulnerabilities exist. The next day, there are going to be new vulnerabilities, right? And the statement I like to make is that prioritization has to happen right then, immediately. And Log4j is a good example for that, right? It's already being exploited in the wild, and the bad guys, they're getting really, really excited about, hey, he's got a Log4j vulnerability or those kind of things. The priority is really, really high from a risk-based standpoint, right? But you may have other vulnerabilities that show up as a high or a critical vulnerability, based on the CVE score of the scanner. But they may not be exploited in the wild, or they may not be attainable or reachable from the outside and those kind of things. So maybe they're not exploitable. So maybe from your perspective, they carry a lesser amount of risk than the things that are externally visible and those kind of things. And I think it's important to think about vulnerabilities that way. If you just try to get rid of all the 4s and 5s, I read an article, it was just yesterday actually, what is a reasonable amount of time to remediate vulnerabilities? But the whole context of this article was really about risk-based thinking, and it's different. It can be, even if you're in the same industry, right? Two banks, you could be right next side to each other, but you could have a different risk tolerance and a different way to prioritize and a different architecture and a different the scenarios are likely different. So the answer is truly, it depends every single time. And you have to impart this critical thinking and this risk-based thinking to really understand the prioritization exercise. But I think that's critically important. So I want to talk a little bit about incident response. We're winding down a little bit, but we won't worry too much about the definition of incident response. I want to go right to this part because I think it's critically important to have. NIST has a framework 861. We leverage that at ASMGI. I would recommend that most people leverage a framework that talks about incident response and has a framework based on incident response. But maybe you can take us through this slide and talk a little bit about like how to establish a program and what the components of a program are, Frank.
Sure. So, the couple of things on that, as you mentioned, it's a pretty common framework. And one of the reasons why it's important to establish that a standard for your organization is then it becomes a common language for you to communicate, within the different areas of the business, and become students of what the overall method is for applying this to your organization. And then in turn, as you're interacting with third parties, this also can serve as a way to have that same common language for interacting with those entities, or as a condition of even doing business with them, you can incorporate that into your agreements that they understand this and how they would be potentially part of any type of incident response process should something occur, and that involves them as part of the world or the ecosystem that you operate in, or even a supply chain as well. So the whole idea here is to, one, understand or understand the model, and then apply these to the different types of technologies or the third-party risk management, even end user awareness. Once you understand the risk profile of your organization, then breaking it down into each of these steps so that you know how, in the event of like the preparation step, how you're going to be aware of the various things that could handle or affect your organization. Applying the detection and analysis, what are you doing to monitor the potential for those things occurring on a continual basis? And then, if something does occur, the containment, eradication, and recovery, is how you then, respond. And that includes, having the incident response plans, the whole, process of recovering from those, and then ultimately, how do you prevent that in the future by going through the closeout and the post-incident summary process or review.
Yep, cool. And what I like about this table is there are all these different ways or these attack vectors that are pretty commonplace, but you can apply this to this model and go through each one of those and talk about what to do in that case. And I think this is this is also a list that you would use to create a tabletop, right?
Right, exactly. Yeah, once you understand what the potential risks are to your organization, then applying that the details in that prior slide to how to deal with across this life cycle each of those potential incidents and risks to your organization.
Yep. I want to get to a couple of questions, Frank. So let's see what we have listed here. How do you know which controls to focus on? This is a great question. I get it all the time, right? So there's so many things to do in cybersecurity. How do you know where to start? What to do?
Well, I think it all goes back to that starting point is having an understanding of the risk profile that applies to your organization, and then in turn how you affect and change those, but then in turn what controls you want to put in place in order to prevent things from happening in the first place, and then begin to have some methodology for how to incorporate that into how you do business.
Mm-hmm. Mm-hmm. It's really that whole, understand what risks there are to your business. And there may be a lot of them. It can feel overwhelming sometimes and daunting. But I think, a good point is to get started. Or if you haven't already, a lot of organizations have, and especially if there's a compliance requirement or regulatory requirement around that. So some of the things are probably already done. But it can seem daunting sometimes. It can seem like, and I see this all the time in cybersecurity, like you have to do everything, right? So you protect against a lot of things, and take your eye off the ball for a second, and you're gonna miss. But I think getting started, there's a quote that resonates with me, that the best time to plant a tree was 20 years ago. The second best time is today, right? So start. All right, I'll keep going through these questions. Will Executive Order 14028 impact the financial community?
I absolutely, that's one, just even the most basic component of that, the software bill of materials. If you don't understand, what is in the various software or applications that you use, or even the technology, it could be something as basic as the a router or a piece of network equipment. If you don't understand what's inside of those and are just making the assumption that whoever's providing that solution or service to you is keeping up with all the requirements that might need to be remediated within those, if you don't have a sense of what that is, then you're right out of the gate, you have a problem. So and there's so many things that are integrated in that type of financial ecosystem that there's a lot of items to account for as part of that software bill of materials, just using that as an example.
Yep Awesome.
One comment before we jump to the next question on the regulatory piece. I think the increased regulation is an actual symptom of a bigger problem out there. By more and more regulations being put into place, that's suggesting that organizations are not proactively addressing the risks that their organizations place, and then in turn are jeopardizing like say the financial system itself, or the ability for even organizations to do financial transactions. So if you have findings as a result of an audit, all that's saying is that you have not been proactively dealing with your own program, or even the requirements from a regulatory perspective. So just want to insert that, not trying to be critical of anyone or any organization, but at the same time, it's so important to be proactive, and you don't really want to be even having findings as a result of audits.
Agreed. Well said. Here's another question. As we try to wrap up, we have a third-party risk program, but just need to operate it. Can you help us?
Well, having a policy that you're going to have a program is a start, but you actually have to go through and inventory all your your third party, entities that you do business with, and then have some type of mechanism for assessing those, preferably something that's more than just a one-time assessment. So, it doesn't, so part of the hard part is actually operating that and operationalizing it. So you're doing that on a recurring basis. And yes, this is, we're not in this is not a sales presentation or anything, but the bottom line is, if you're struggling with staffing that or actually implementing a program, those are the types of things we assist clients with all the time.
Yep. Yeah, and I would just add to that, Frank, that we have a saying at ASMGI that a total solution is the program plus the technology plus the operations. So, if I looked at this question, if you already have a program and you already have a technology platform, our model, we call as much or as little as you need. If we could just do the operations piece, we can help with that for sure. If you need all of it, well, then we can do all of it. If you just need that part of it, then we'll just do that part of it. So great. Last question, and we'll wrap it up. How do you know what tabletops to do?
That goes all back to the assessment, defining your risk profile, determining, the likelihood and the impact of a particular risk, and then prioritizing those based on, that sort of stacked ranking. So, ideally, you do the things that have the highest likelihood and the most impact to your organization, and start there, and then, work your way through the list. The good news is, once you start to apply the basic tenets of a tabletop, have your cybersecurity incident response team defined, start to familiarize everyone with the basic concepts around incident response. Those things are consistent across a variety of types of incidents, but at least having that foundation is important. And then you can determine, based on the risk, or the likelihood and the impact of that sort of list, which how you should prioritize the various tabletop exercises.
Yeah, and I think this is it's a manifestation of that risk-based thinking, right? So if you think that way, then do the things that are, the highest risk for your organization. And I see a lot of companies that say, what should I do? What's everybody else doing? What's this? What's that? And read a lot of articles that have the top 5 or the top 10, critical things. Risk-based thinking is the things that are riskiest to your business. Those are the things that you should do.
Right.
And it's less about what everybody else is doing than it is about your business and those kind of things. But then the other thing that I would say is that the cyber incident tabletop is general in nature, right? So any incident that impacts the operation of your business, right? Your resilience, your ability to operate and continue operating. To your point, there's some common ground about how you would respond to those and how you would act. So you could do a general cyber incident response program and tabletop exercise, and that applies to any type of incident. So I think just identifying what the attack vectors are and doing specific tabletops for those is a good exercise. There's no question, but you have to do that general exercise. So then, because my statement is, if you prepare for a hurricane, you're going to get hit with a tornado. But in any event, so that's I want to wrap it up here. Objectives, I think we hit all of those objectives, so I'm just going to move past that. I just want to reiterate the offer. If anybody on the webinar wants a copy of what the insurance companies and your customers and the bad guys, what they're leveraging to gain a visibility into your security posture from externally, then we're more than happy to generate that for you and send it to you, and include a consultative call. So any closing remarks, Frank?
Yeah, I think, one of the things hopefully everyone that's attended today takes away from this is, one, we try to be as prescriptive as possible, meaning not just posing the fact that a problem exists, but how you can actually go and actually do something about that. And hopefully, by the things that we covered here, you have the ability to do that. This is all based on breaking down a problem and then how to best address it and go about
Yeah.
systematically dealing with it. And that's really the key points that, you know, when all is said and done, we'd like to deliver as part of these type of conversations.
Cool. Cool. I call that focusing on the solution, not on the problem, right?
Right.
Want to wrap it up because I know we're over on time. Thank you, everybody, for attending today. Thanks, Frank, for your wisdom.
Yep.
And
Oh, thanks. It's been a pleasure.
see everybody.
Thank you.
Thank you.